Warning. Listening to this show may result in increased levels of inspiration, motivation, and innovation. Side effects can include the immediate urge to take massive action to build a better business and life for yourself and others. You've been warned. Welcome to Influencers Radio with your host, Jack Mize.
And welcome back to another episode of Influencers Radio. You know, there are a lot of myths and misconceptions about health insurance in the U.S. You know, most of us don't truly understand the Affordable Care Act, and a lot of people think that getting insurance through their jobs is the only cost-effective way to go. And there's a good chance that that may not be the case. Well, today my guest is Brenda Gilliam. She is the founder of Gilliam Insurance Advisor, where she helps the working class as well as retired and semi-retired navigate the maze of choosing the right option for themselves and their families. Brenda, welcome to Influencers Radio.
Hi, Jack. Thanks for having me on here.
Well, I'm glad you could be here because, there are so many questions and insurance is something that a lot of people don't think about until they really need it. And that's when, it can really be unfortunate if they're not prepared. But there's so many options and so many unknowns or really misconceptions about it. So I think I'd like to kick this off by asking you, what are some of the biggest myths and misconceptions that you see about the state of health insurance today?
Yeah, Jack. Well, one of the biggest myths is that people feel like that they can't afford insurance. So they usually just, they won't take out insurance because when they've checked on it in the past, they've just got very high monthly premiums that they can't afford. So they just throw their hands up and kind of give up on it, thinking that they can't afford it. And if they're on Medicare, sometimes those people will hesitate to add the Part B because they got to pay a Part B premium. They don't know that there's special programs in place that can help people pay their Part B premium. So it makes the health insurance affordable when they just have a good source to go to and have the correct information.
Well, you said that, and that really is, I think, kind of the irony of what's called the Affordable Care Act, because a lot of people that I've talked to that go on to the what is the kind of self-service site, the insurance, the government site for checking on
healthcare.gov.
Yeah, healthcare.gov. They tell me exactly like you say. They put in their information and come back with these, astronomical premiums, $1,000, $1,500, $2,000, for especially for self-employed people. A lot of self-employed people I talk to, and that's $2,000 as long as they don't use it. It seems like
exactly.
if they want health insurance that they can actually use, it just goes up from there. So I guess let me start by talking about some specific scenarios, and I think self-employed folks are probably one of the best to start with. What are some of the options or the obstacles that you see with getting one affordable and usable health insurance for self-employed?
Sure, Jack. So one of the biggest issues, like you just said, they go to healthcare.gov and they see that they can get insurance for $2,000 a month, which is more expensive than your average family can afford. And then they look at the insurance and they see, well, they've got to come up with a lot more money if they actually have to use the insurance. So out of frustration, a lot of them just goes uninsured. But what I do is I specialize in getting subsidies and grants for families, for self-employed, that actually lowers that monthly premium. But also, I always look for plans that have low deductibles. So that way, the day that they start using the insurance starts paying. I don't put people in plans that have those large family deductibles because those can range anywhere from $9,000 to, I actually seen one the other day, their deductible was $21,000, their family deductible. So that means that should they be in the hospital and have a big bill, yeah, they've got insurance, but they would have to come up with that $21,000 before the insurance even started paying. So it's important to work with someone that knows how to get you a plan without having a huge deductible. I always aim at getting family deductibles at least $5,000 at the most and going down from there.
Well, I think that's where so I think a lot of people may not understand when they use a service like yours, because a lot of people, they do think it's just self-serve. I go on this site, I pick, this is too much for me, and they don't know that they have other options. So when people use, like your customers, your clients, when they use your services, is that another fee that they pay to use your services, or is
No,
that?
Jack, I don't charge any fee for my services. So I save uh, self-employed people and families that are trying to get insurance considerable amounts of money. But the other aspect of it too, Jack, is your average consumer doesn't understand all the language that's in a policy. So they may not realize, if they're looking on their own, what does it truly mean, a deductible versus a copay versus a maximum out of pocket. So working with a person that understands the insurance helps the client not only save money, but also make sure they have a good policy that's a good fit just for them and their families.
Yeah, and I think that's something that's difficult for someone to do, just kind of going through the like the healthcare.gov, because I think most people don't, beyond what doctors does this can I use, what hospitals can I go, is this near me, is this near my office? Other than that,
Yes.
they're not really sure what else to use as the criteria, right? Do you find that to be the case, that people just don't understand what they should be looking for when choosing the policy?
Yes, and that can be a very costly misunderstanding, because what I have found with my clients that I have helped, they got this misconception that, oh, I've got insurance, so I'm good to go. They don't realize that there's only certain hospitals and certain doctors that take the insurance. So they may end up in the ER and could be in there for a week or two, and they're thinking their insurance is taking care of it. Then they get discharged from the hospital and they've got $150,000 bill, and the insurance doesn't pay a penny on it because it turns out that hospital didn't participate in the insurance that client has. And your average consumer doesn't understand that. So they just think that because they got insurance, they're good to go regardless. So it's important that the client be educated about that prior to taking out the policy.
Yeah, well, and the topic of insurance is something that I think people can go cross-eyed just trying to figure it out, to begin
Yes.
with. Like you said, even some of the understanding the terms of that. I mentioned at the top of the show, so we talked a little bit about the self-employed, but there's a lot of people that think that getting their insurance, oh, my job offers insurance, and they just automatically think that's the most cost-effective way to go. Is that the case, or is that just another myth?
Yes, exactly. That's a myth. 20 years ago, Jack, insurance worked a lot different through employers. First of all, they were affordable. And then when you went to the doctor, you would usually just pay like a $20 copay at the window. And then you never got a bill. The insurance took care of that. But in the last 10 years, insurance has changed drastically. And so employer coverage, you're still paying quite a bit to have that, especially if you're insuring yourself and a family. But the problem with that is that you have these large deductibles. So you may think that your employer is the best way to go, but if it's costing you $500 a month to have the insurance, but then they've got a high deductible, such as say $10,000 or $15,000, that means that should you have to use it, you've got to come up with that amount of money, plus you're paying the $500 a month. And so most employers, they get these high deductible plans so that it's less costly on them. And they get these plans with high deductibles so that they can offer coverage to the employee, and the employee's not really aware about these high deductibles till they go use the insurance, and they have other options. They may not be aware of it, but they do.
Well, and I think that's where a lot of people make the mistake of they think, well, the way I find the cheapest health insurance is the least expensive. The least expensive premium is the cheapest insurance plan, and that's probably not the case when you actually dig into it, right?
That's correct.
And is that generally when people go through their work plans, they think, oh, it's cheaper for me to go through work than it
Yeah.
is to do it on my own. But then,
Yes,
just like those points that you talk about, that's where it can get out of hand, right?
that is exactly where it can get out of hand. And I've worked with several clients, Jack, that they are only working because they need health insurance. So you take someone, for example, that's 61, they're ready to retire, but they don't know what they're going to do for health insurance. So they think, well, I've got to work somewhere where they offer me health insurance just so that I can have insurance. And they don't have to do that. They don't have to go back to work somewhere just to have insurance. They can get good policies at affordable rates without having to go back to work. They can get it on their own.
And so, if someone does, as far as options, if someone does take it through their work, can they go out and get other supplemental insurance, or is it they need to pick one or the other, either decline their company plan and go with something independently on their own, or is there a mix and match option?
Normally, when it comes to the health insurance, it's either or. Either you're going to go through your employer or you're going to go on your own. So you don't, the employer is going to be taking out money for that insurance. So most people don't want to double pay. But then also some health companies require that you only have that one plan. Like, other words, they don't cross over and let you go back and forth between two plans. So most all times you're going to either pick, I've got to go with my employer, or I'm going to go on my own.
You mentioned about, people that are getting towards that retirement age and they think, well, I need to keep working just for the health insurance. And I know a big part of what you do is helping people that are in that phase of life, especially with the programs like the Medicaid and things like that. Can you go into some of the obstacles and I guess roadblocks that you see people facing when it comes to that phase?
Yes. Well, we have a lot of working families and self-employed individuals that they work very hard, but they're not high income earners. So they don't realize it, but there are special programs, and I do specialize in these subsidies and grants, and I can actually fill that out for the client and get them help on their monthly premium. So, for example, if there's a health plan and it's normally $900 a month, depending on their income, I can get that lowered down to maybe $100 or $200 a month because they're getting that extra help, that subsidy. And that's something that almost nobody knows exists or doesn't know how to utilize it. So I've took it upon myself to understand these programs and get them in place for the client. So it's a very, very valuable product or situation to be in, to know that you can qualify for that and then be fully covered with a good plan that doesn't have this outrageous deductible and at a rate that you can actually afford without draining your bank account each month.
Yeah, and when you talk about people not, realizing that those kind of things are available, I think that a lot of people don't realize that there's advisors like you available that can help them to weed that through that. That's not going to cost them a service fee or anything that upfront to do that. And I think that's a remarkable thing that you're doing. When it comes to the types of insurance that people are getting. So say just like anything else, people get the insurance and they tend to just stick with it. And that's that's my insurance forever. Is there a certain time that you recommend that people revisit and maybe go back and check to make sure that what they have is optimal for them at that period of time?
Yes. Usually right around November is the best time to reevaluate if the plan that you're currently in is actually the best plan for you, both from how good the plan is, but also from a financial standpoint. So some of the health insurance programs that will accept the subsidies, they have an open enrollment period, and that runs usually from November 1st till January the 15th. So it's not really something that you can do just any time of the year. And that's another thing that consumers need to be aware of.
Oh, so well, let's say someone just doesn't have health insurance right now. They say, I really need to get health insurance. Is there a window that a specific window where they're allowed to sign up for insurance?
Yes, if it's just regular insurance, health insurance, then it's runs from November 1st to January the 15th. After January the 15th, you cannot enroll in the health plans until the following year unless you have a special enrollment period. And special enrollment periods, Jack, are things like having a baby or getting married or getting divorced or moving from one state to another. But unless you have any of those, you have to wait to the next open enrollment to enroll.
Yeah, well, you mentioned earlier about how different insurance is from 20 years ago. I'm thinking about how different the healthcare industry is from 5 years ago.
Yes, I know. Lots of
Because,
changes.
yeah, I mean, 20 years ago, you pretty much chose, well, do I want an HMO or I forgot what the other one was called, right?
PPO.
Yeah, PPO. Now it seems like you've got telemedicine, these concierge doctors pay monthly, all that. How do those kind of fit into the mix of all this?
Well, that's where it depends on the individual. If you've got someone who's seeing a lot of different doctors, or say they may have 3 or 4 different specialists they see throughout the year, if they're in an HMO, they have to make sure all those specialists and doctors are in that plan. So a lot of times a person in that type of situation needs to look at a PPO so that they have the flexibility to go out of network. And another thing is that on social media, you'll see a lot of advertisements for short-term medical plans. I do offer those plans as well, because sometimes that's a good fit for people. But the problem with the short-term medical is they don't cover a lot of things that the regular health insurance covers. And unless the consumer is working with an honest agent, that's not always disclosed to them until they figure it out after they've already got the policy. So there's a lot of changes, like you said, Jack, to plans. And that's why it's important to understand what you're buying before you purchase it. So yes, insurance is constantly changing, and it's important that you have the facts. You do not want to be in a situation where you think you have something and you don't, and you have to access care, and then you get a surprise bill, for thousands of dollars sometimes.
Yeah, well, definitely, and then those can be a big surprise. One of the things that I've talked to some folks about is they look at like they've looked at healthcare gov, or they see these crazy high premiums that they just don't see that as being an option. So they get, I guess, what's called catastrophic insurance or something like that. That's a lower premium, but only covers. But there's certainly got to be perils into that, because it doesn't cover regular doctor visits or anything like that. Can you talk about maybe the pros and cons of that?
Yes. Well, I don't encourage anyone to just look at a catastrophic plan. If anybody is looking at that, that tends to be your younger, very healthy people that they don't normally go to the doctor, so they got a plan like that just in case something bad happened, like an unforeseen car accident or something like that. But the problem with the catastrophic plans is there was a study that came out that 85% of the individuals that have a catastrophic plan, they actually don't go to the doctor when they're sick. And
Mm.
sometimes that leads to bigger issues because the doctor visits aren't covered. So they'll try to save money and not go when they need to. So they compromise their health. And then sometimes that can even lead to a bigger problem, like a cancer diagnosis or a late stage medical condition that could have been rendered had they went when they first started having symptoms. So that's kind of the mindset of the people that have those plans typically is they just don't go, and they just got that in case something huge happens. They're just not very good at keeping up with appointments and yearly appointments, and they usually kind of self-diagnose themselves. So catastrophic plans, I don't usually recommend to anyone. I mean, I guess it's better than not having anything, but it's not ideal for sure.
Yeah, well, you brought up a good point that with that, I could see where a lot of people skip their yearly physicals and things like that, and yeah, that can certainly, especially if someone's not young and invincible, all right.
Exactly.
So one thing that I wanted to talk about was, folks, especially in this day and age, people are leaving jobs. It seems like, with the employment the way it is, and over the past few years with the COVID, a lot of people just leaving jobs, a lot of people moving from full-time employment to gig work and that kind of thing. You hear a lot of people saying, oh well, I'll just I have insurance, when I leave I'll just get the Cobra, right? And and I can imagine that one, I guess it's limited in time, but also I think it's not as cost effective as people probably imagine it is. Would that be the case?
Oh, that's definitely the case. Most people that leave their job and then they have that option of getting Cobra, once they see what the cost of it is, most of them can't afford to even have the Cobra. Because I'll give you an example, Jack. If you're at an employer where you have coverage and let's say you're paying $300 a month to have the insurance, and you leave that job and you do the Cobra, the $300 that you were paying can turn into $2,100, $2,200 a month. And a lot of people that's leaving the employer, they don't always they don't have other income coming in, so it's even more difficult to pay Cobra premiums when they're leaving a job. Cobra is the most expensive form of insurance out there. But it does serve its purpose. Like when someone's transitioning between jobs, if they happen to have that kind of income to be able to spend on insurance, then that works for that individual. But your majority of people that is leaving a job, they can't afford to carry the Cobra.
And if they can afford it, it is somewhat temporary, right?
It is temporary. You only get to have Cobra for so many months before you have to find something else. But like I said, in my experience at my agency, most people, when they find out what the premium of the Cobra is going to be, they realize they can't afford it.
Yeah. Well, I have to say, the what you do is what it's really remarkable the way that you're helping people, because this isn't a topic that people like to tackle. It's not a topic that people get excited about. Oh boy, I get to pick some new insurance, right? But having the wrong insurance can be life changing, and not the good way. If something does happen, right? And can you give us some examples of some of this where people were faced with something happening that they just weren't prepared for and didn't know that the insurance they had was not going to cover them in that case?
Yes. Good example is like you had referenced earlier is the people that go on to look for insurance on their own on either healthcare.gov or some other site. They don't understand the terminology. So they don't understand what a maximum out of pocket is, or they don't understand what a deductible is. So if they are looking at a plan and they see, let's say, for example, this plan is $18,000 family deductible. If they don't understand the terminology of deductible and they select that plan, especially just based on price, it's very unfortunate when they start taking their children to doctor's appointments or themselves to appointments, or they end up in the hospital and they show their insurance card and the insurance comes back saying, we're not paying because you've not paid your deductible yet. And then so the individual, where they just didn't understand, they understand after it's too late that they've got to come up with that amount of money before the insurance pays. So it's very important to get those plans that have very low deductibles. It makes all the difference.
Yeah,
But
because I think, like you said, when people compare, that's what they're mainly looking at is the premium, and that can be very deceiving, I guess.
it can. It really can. And for some people, when they've got a family deductible of $18,000, they're thinking, well, what do I even have insurance for if if I have to pay the $18,000 before the insurance pays? So again, there are plans where there's low deductibles, but you have to know what you're looking for. And it also helps if you understand how the subsidies work, because most people do. Most of your average American family or self-employed individual qualifies for some level of a subsidy, and that can get you a plan that you can afford, but also has a low deductible.
Brenda, we touched on the topic a little bit earlier, but I want to get a little bit deeper into those, retired and semi-retired folks, and especially people that are just getting to that phase in life. You hear terms about Medicare, Medicaid, that kind of thing, and most people, it just whizzes right by them because they've never paid attention until it's time to pay attention to it. Can you go into a little bit of the some of those myths and misconceptions when it comes to people that do have those opportunities for Medicare, Medicaid, and I couldn't even tell you the difference between those two.
Actually, I love talking about Medicare. Medicare is a topic that's really misunderstood by most people. So the first misconception is that people that get their Medicare, they're elated. They've worked all these years, they've paid into Social Security, they get their Medicare, and they are golden. And in a sense they are, but what most of the average consumer that gets Medicare doesn't realize is that Medicare only covers 80%. So you've got to meet with someone, or it's at least recommended that you meet with someone, because it's a little difficult to navigate on your own. You need to meet with someone that specializes in Medicare so that they can help you figure out what you're going to do with the other 20%. And that's where I come in. I come in and give you a plan based on your individual situation, that way that you're 100% covered. And then you had referred to Medicare, Medicaid, and Jack, people get those two confused all the time because they sound a lot alike. Medicare versus Medicaid, there's not a lot of difference in the words, but they're entirely two different programs. And Medicaid is the state plan that is offered to very low income people. It's offered to people that are young and have children and are low income, or maybe they don't have a job at all. And it's also offered to low income Medicare beneficiaries. So there are people on Medicare that will have both Medicare and Medicaid. And those folks, they don't pay a Part B premium. So essentially, they'll get their Medicare and their insurance, and they won't pay anything at all to have the insurance.
And so that's the one, we talked earlier about it, like through employer and not being, really supplementing anything. But that's the one case is once you do go onto the Medicaid, that you talk about that 20%, there is something that they can do to cover that 20% that's not covered, right?
Yeah, with Medicare. That just applies to Medicare.
Right,
Yeah,
okay.
so with Medicare, yeah, there is all these options. Overwhelming amount of options, honestly, and so it gets overwhelming to the consumer on what should they pick or what should they go with. And so that's where I come in. I have a conversation with them. I don't charge no consultation fees or anything like that, and then based off the conversation, I make recommendations to them based off their income, but also their health situation, and also what medications they're on what plans to fill in on that other 20%, because Medicare does not cover prescriptions. It does not help on glasses. It does not help on dental. That other 20% that you're trying to figure out, that's where the dental and the coverage for glasses come in. So when you first get Medicare, it's very important to work with someone that's very knowledgeable in that area.
Well, you are certainly not only knowledgeable, but you have a passion around this, and something that very few people, get excited about, and you can hear the passion in your voice, and you truly do, make a difference in a lot of people's lives, and you could hear the drive of that. In hearing you talk about this. So, what fuels that passion? What is it that led you to do this and to help the people that you're helping?
Yeah, Jack. So, uh, what led me into this is basically my mother had got Medicare, and she just did not understand how it worked. She was one of those that thought, I've got my Medicare, now I'm covered. She didn't realize that she needed to do something on that other 20%. And what happened with her, Jack, was she had got diagnosed with a serious illness, and she was referred to a specialist, and the specialist told her that he could cure her condition, but that she needed to pay up front. And I think that he wanted somewhere around $12,000 or $13,000. And my mom didn't have that. So he just sent her on her way. And that illness that she had progressed, and I ended up losing my mother. Um, and it
No.
was devastating to me, but also the whole family. And when I really got into what happened, because I found I didn't understand insurance at the time that this had happened to my mother. I realized that it was because she didn't have that other 20% covered, but she could have had it covered for nothing, Jack. She could have had that covered with the other 20% had she only been educated about it, and she would probably still be with us today had she been totally covered and got to see the specialist that would have been able to help her condition. And I realized that my mother's not the only one that doesn't understand it, and I don't want to see that happen to anyone else. So that's when I decided I was going to switch from being a science teacher, and I started educating and being a teacher of insurance, particularly Medicare, and how important that 20% is to get covered. That way, if I can prevent any other person to have to go through what my family had to go through and what my mother had to go through, then that makes it all worthwhile.
Well, I tell you, having someone that has your sources of inspiration, and you are truly an educator and an advocate for the people you help. The people that do find out about you are truly lucky, in my opinion. So I want to thank you for definitely coming on here and talking about this and educating folks about their options. And the good news is that you are willing to come out and educate people on these options. The not so good news, maybe for some people, is that you work with folks in the what is it, the Virginia, North Carolina, and Tennessee areas,
Yes,
right?
I'm licensed in Tennessee, Virginia, North Carolina, and South Carolina, and I'm actually working on adding a few more states as well. But those are the states that I'm currently licensed in.
Well, so folks, right there, I think have the advantage of being able to work with you to do this. So, how can people find out more about Brenda Gilliam and the Gilliam Insurance Advisor?
Sure, they can reach out to me by my website, which is gilliaminsuranceadvisor.com. And at the website, Jack, I have a contact form that they can fill out, and they can submit that and get right back to me. But also, if they go to the website, if they prefer to contact me via a different social media platform, I've got links there. That's Facebook, Instagram, LinkedIn. So if they'll just go to the website, they can contact me multiple different ways. And again, that's gilliaminsuranceadvisor.com.
Well, fantastic. Well, we'll definitely put those links on the show post. Brenda, again, I have to thank you so much for coming on and your willingness to share and educate folks. It really makes a big difference in people's lives. So thank you.
Well, thank you, Jack, for having me on the show. I hope that I was able to provide some good information for your listeners.
Oh, without a doubt. All right, folks, there you have it. Definitely check out, especially if you're in that Virginia, North Carolina, South Carolina, Tennessee area. Go check out GilliamInsuranceAdvisor.com. And also check out Brenda on social media. She's an educator, so even if you're not in those areas, there's always something to learn, as she certainly demonstrated here today. Until next time on Influencers Radio, remember, you are the only real game changer.
You've been listening to Influencers Radio. To get all past shows and updates on future shows, visit influencersradio.com today.